I think if you were to put a little bit of whiskey in your coffee cup this morning, nobody would really blame you. We've had a heck of a week already. And I want to just point out that Sean and I are not political scientists. We're not journalists. We're not even economists. We're mortgage people. So we're going to try to break down this week what we project the Bank of Canada is going to do with a rate announcement. Last week, we had a whole thing teed up. And then, of course, the U.S. president announced sweeping tariffs to Canada and Mexico, which are going to have impact on our future, our financial future. That we're not 100% certain what that is going to look like, but we're going to try to break that down from a Bank of Canada perspective. We're going to look at the different variables and hopefully provide some insights into what you might want to do with that if you're thinking about purchasing a property in the near future. Anything else to add to that?
Yeah, I mean, I think the idea is let's break down the different factors. I think going into this meeting last week when we were kind of thinking about it, is that this seemed like it might be one of the more uncertain meetings. Like, will they cut? Won't they cut? And I guess we still have a week to go because last week it seemed like, well, they probably pause. And this week it seems like, well, they're probably going to cut. But a lot can happen in a week, as we all know. And whether or not these tariffs come through is a really big factor on what the Bank of Canada decides to do next. So, I mean, let's start there. Let's start with kind of the biggest potential shock to the economy. I mean, how serious is this really? So, for months we've been bracing for kind of a trade war revival. We had it a month ago, and now we're heading into it again. And so if these tariffs do last through the week, what's going to be hit the hardest? Where can we see this kind of being, what kind of issue is this going to be? Like, where do you see this having the biggest impact, Vaughn?
I mean, specifically, I think on our manufacturing sector in the aluminum sector. I'm going to read a quote. So this is from a CIBC economist. If the tariffs remain in place long term, Canada's GDP could contract by 2 to 5%, with up to 350,000 job losses. A blow that would hit Ontario and Quebec the hardest due to their heavy reliance on manufacturing and resource exports. So, I mean, that is like, nobody at this point with that information on the horizon would be excited about a Bank of Canada rate cut, because we never want it to come at the cost of 350,000 Canadian jobs and a 2 to 5% hit to GDP. With that on the horizon, we would expect rate cuts, massive rate cuts, to come our way.
Mm-hmm. Yeah, and the flip side of that is, like, without these tariffs, GDP's been recovering nicely. We've had a nice kind of upslope of growth. Certainly not conducive to lower interest rates needing to spur on the economy. So GDP's been going well. The economy's been going well. But a major shift in terms of manufacturing. We were talking before we jumped on about how President Trump wants to move all of the U.S. Car manufacturers should all have plants in the U.S. What was your takeaway? You watched I couldn't bear to do it. What was your takeaway?
Yeah, I don't blame you on that. I mean, I specifically wanted to watch it because I didn't want to read articles on it today that were maybe taken out of context, because I think that in the past, Donald Trump has had comments taken out of context before. So I really wanted to focus in on what he's actually saying. It really, the takeaway, if I was going to summarize it, he seems to want the U.S. to be a completely independent country, an island. He's boasting about cutting any spending outside of the United States that doesn't appeal to him, and talking about if it's not manufactured in America, you will pay a tariff on it. Unclear whether he understands that it's the American population that pays the tariff or if it's the exporting country that pays the tariff. So that causes so much uncertainty for, I think, anybody watching. Is, does he fully understand what he's proposing? A lot of the articles that I read this morning suggested that they're not sure about that either. So where does that do for us to plan what's happening with our economy? Do we know what's going to happen with, are the tariffs going to roll out long term? His, it's not a finance minister, but one of his cabinet members talked about it potentially being over by Wednesday, or tariffs cut in half by Wednesday, but not rolled back completely. So, man,
I think he was, and I mean, we saw immediate, reaction to that. The market saw immediate reaction, but then Trump got on his Congress presentation and his speech and said basically the opposite, that he loves tariffs and tariffs are going to save the American economy. I mean, for us here in Canada making decisions, that causes businesses to, obviously everybody's uncertain what's going to happen next. So if you're going to make a big purchase in, hiring, opening plants, purchasing equipment, purchasing an investment property, doing any of those things, it just puts everything on pause until we know what's going to happen. And so I don't think he cares whether or not it's going to be the American people that pay for it. He's willing to have a certain amount of pain because it's not him personally. It's not anybody that is really close to him that is going to feel that pain. It's the American workers and American consumers that are going to feel that pain.
And he admitted to that in his presidential address last night. Admitted to there'll be some short-term, very short-term pain to be felt while this goes underway, and then after that, everybody's going to be rich, and America's going to be this dynasty, most powerful country the world's ever seen. So, I mean, that's sort of what the other side warned us against with this guy, and it seemed like he doubled down on it. He boasted about how mortgage rates dropped, and that was didn't give the reason why. I mean, the reason that mortgage rates were I don't think mortgage rates dropped overnight, but they
This is
likely
in the
will.
US, right?
This is in the US, yeah, because of the bond yield or the treasury yield in the States, because people pulled all their money out of the US market. The stock market dropped, the bond yields dropped, the investments essentially paused, like you recommended, which would drive interest rates down, right? So he was boasting about getting the mortgage rates down, but not really talking about what contributed to that and how that's in general a terrible thing.
Yeah, further to your point, I grabbed the NASDAQ composite index, how that stock industry index has been doing over the last 3 months, and you can see how people have pulled their money out of stocks and into bonds. When people put their money into bonds, that makes those bonds less profitable because people need, they want that safety. They're not going to make as much from those bonds. And then that's what lowers mortgage rates in the US and in Canada. So we see those here. I'll go to the, so you can see it went from 20,000 down to just over 18,300 as of this morning. And that's because people are uncertain of what's going to happen in the economy. If you look at our 5-year government bond yield, which, it's kind of a good indicator of what's happening with mortgage rates or the profitability of mortgage rates, we can see, Tuesday morning, a big drop in those rates. And then this is Howard Lutnick on the big swing up on the end of the day on Tuesday is Howard Lutnick on Fox News saying that maybe there's an off ramp for tariffs as of Wednesday. And then Trump's speech was after this, and then they just drop into Wednesday. They've been coming back down. So nobody's believing that, this is just going to be a short-term thing, because they would be throwing their money back into stocks because we're going to have amazing growth.
Yeah, certainly if you listen to his speech, it only indicated that Canada and Mexico were first that Europe China as well were first on the list of countries to have their products tariffed. Claimed that pretty much most of Europe was next on the list, and all of their trade partners and allies were going to be subject to it. So I've definitely never seen anything like that. I've never heard that sort of rhetoric out of any U.S. president or Canadian prime minister.
Nobody has. Lifetime. No. I mean, in the sort of last major tariff war that happened out of the U.S. was in 1930 with the Smoot-Hawley Tariff Act.
Bueller?
What's that?
Anybody? Bueller?
Anybody. But, at that point, they then sunk themselves deeper into recession. And then that was the Great Depression that happened after that.
Yeah.
So
and
that's what we have to base this on.
Yeah.
This is what happens with tariffs.
It's not a great idea.
No, it's a terrible idea. As and as Justin Trudeau and Premier Ford, Premier Smith, they all got up and basically said the same thing. I'm really proud of how we've put our political stripes aside, at least in Canada for now. And it seems like everybody's on Team Canada, and we're all doing the same thing. And what Trudeau said is like, "Hey, Donald, you're a smart guy. Wink." But this is a really dumb thing to do.
Yeah, I thought that the response, I can't get behind this guy as much as like the message I can get behind of
right.
Like so one of the headlines this morning was like, Trump may walk away with a bloody nose from this, and like essentially that he's going to cause himself the bloody nose, right? Like we don't have to do much. For the Americans to for the backlash to come from Americans based on what's going to happen to their cost of living. Right. But with Trudeau saying it was a very dumb move, I just thought it was like, apologies for the language, it was a limp dick kind of response of a prime minister who's maybe has a week left in his job and doesn't have to back up any of the words himself. I do like the pro-Canada sentiment. I even think that, what Doug Ford said, we're going to shut their lights out and all this stuff. I'm like, sounds a bit childish. It's not the brand of politics that either one of us grew up with that I'm really would love to see again. But yeah, obviously we got to stand together on this.
Yeah. I mean, this guy's a bully. And I think, we all remember, bullies in school, and they always say the one thing the bully can't stand up for is somebody pushing back, and a punch in the nose is what would do it. And it almost feels like all those friends, all those classmates in the schoolyard that don't talk to each other are kind of getting together and being like, this guy's a bully.
And I hope that that's the outcome, right? Because Mexico said that they were going to delay their response until Sunday, their sort of tariff response. And I just hope that nobody saddles up to this guy and tries to get buddy and starts throwing other countries under the bus. I think if we all unite and not unite against the United States, this is not a dialogue that we want to have either, but unite against these tariffs, against this, like, President Trump seemed to like he seemed to enjoy the idea that he was going to punish the rest of the world, and that's what we need to fight back against, is that idea, even if his policies don't make sense to Americans. Hopefully Mexico will help that sort of counter bully approach that we have.
Yeah, hopefully we can all get together, and I mean, at least strengthen our trade agreements outside of the U.S. We send 70% of our trade to the U.S. 75% of our potash, or 75% of the U.S.'s supply of potash comes from Canada. 70% of their aluminum comes from Canada. Like, these are big things that can have a major impact, but. Think about these numbers, Vaughn. 30 billion is our initial tariff response. We can do another 125 billion coming up. That's 107 US dollars. That's billion with a B, but that doesn't at all stack up to the response of the stock market, which saw an $800 billion correction. And I know we gave some of that back, but we're probably going backwards again. And that's really what's going to make a difference. It won't be Canada's trade tariffs and 30 billion here, another 125 billion, which are huge numbers to us. But to the US, it's about their stock markets and how those companies are doing, and how some more powerful players are going to feel the impact of that than what Canada can do.
Interesting. Not my field of expertise, but and also, they can't replace. There's no overnight replacement for that amount of, so let's say just the potash and the aluminum. They need the potash for their fertilizers. They don't have another supplier. So with that said, there's uncertainty, yes, but should there be direct fear? Well, not necessarily, because if it just means that U.S. consumption is going to dip a little bit, which it could, it may not dip drastically. If they don't have a replacement, they just have to spend more for the same amount of goods. We could be okay from it, potentially. Short term, right. I think so as well. It's just sort of the long-term effect. Eventually, they'll have to slow down on the purchasing of those items.
Yeah. And I mean, that affects consumer goods, right? That affects the farmers that are purchasing those things, the builders that are purchasing the aluminum. So that then gets passed on immediately to consumers. But I don't think Donald Trump cares even a little bit about consumers. But he does care about this. He does care about the stock market, and he does care about probably some of these big financial firms, the pensions and the different large corporations that would be affected. Those stock prices would be affected. I think that's what's going to hit him before any of the tariffs would have an issue. And if, I hope it doesn't get to the point where we're cutting off the power to Michigan and New York to make a point on this.
Right. Me neither.
That seems like dirty pool a little bit.
Yeah, there's no desire, I don't think, to escalate this. We're just standing up to a bully. We don't need to go and attack his family or anything either.
Where are we going here? Where's your mind going?
Where is this going? So tariffs, they're inflationary. Inflation is prohibitive to interest rate cuts, but it's also devastating to the economy. Without the tariffs, what do you think the Bank of Canada was going to do next week? We'll try to go line by line.
Yeah. So do you want to talk about inflation?
Well,
or you want just me to make a prediction? Because I think let's save our predictions to the end. Let's talk a little bit about what's happening with inflation. Yeah, because it held steady at 1.9%, which wasn't kind of the dip that wasn't the dip that I think they were maybe expecting. You did some research on this.
Yeah, core inflation came up 20 basis points year over year. Inflation was up 10 basis points from December, despite the GST holiday. So, the inflationary trend seems to be moving up, which would definitely, if that was the only factor that the Bank of Canada was looking at, there wouldn't be a rate cut next week.
Right.
And it would be prudent not to have a rate cut. I don't think it's very forward thinking, because I think that there's constant recessionary threats to the Canadian economy, even without the tariffs. But with the tariffs specifically, those threats are right.
Yeah, there. I think that if we're just looking at just inflation, and I think the Bank of Canada primarily just looks at inflation as they can look at consumer confidence and they can look at wage growth, and we're going to talk a little bit about those. But if their main thing is inflation, I don't think that the inflation data supports another rate cut on top of the rate cuts we've already had. I think that they would just pause and let's see what's going to happen, and let the past rate cuts kick in.
Yeah, but without a forecast of an upward, like a continued upward trend, there is still room to cut interest rates, right? If if they want inflation at 2% or 2% is healthy inflation and we're underneath it, that suggests that it is safe to cut by 25 basis points anyway.
Yeah, but I don't think we need to be in a hurry to get there like we were, with our past 50 basis point cuts and kind of getting down close to this area. We're at 3 now. The policy rate's at 3 and inflation's at 2. So that does indicate that there's, a gap of 1% there for the Bank of Canada to potentially lower to 2%. But I just don't think that inflation data is like, let's make sure we're cutting. I think if we're trying to stick the landing, we're trying to get inflation to not skyrocket back up, you do want to slow down the pace of those rate cuts.
Yeah. No, I could see that. I don't think it's very forward thinking, but in the immediate, it's as safe as you could kind of be right now. You could definitely, without the news that came this week about the trade war, the Bank of Canada could safely pause without backlash.
For sure. I think if we're just looking at inflation, a pause would probably be expected at that point. I have a slide on the next thing we're going to talk about is Canada's job market, which is showing pretty mixed results. Unemployment has ticked down 6.6%, but job vacancies have hit their lowest level since 2017. Wages are still growing, but is the labor market starting to show maybe that the economy isn't that great? Are we seeing the first signs of a weaker job market? How does that factor into the Bank of Canada's decision making?
What did you get? You got a slide for us?
Yeah, let me tee that up for us here. How do I get it back here? Okay, or it's just there we go. All right, we're getting there. Nice. So, so I grabbed this from Statistics Canada as well as Better Dwelling. They put this together for us. And so you can see that, those job vacancy rates have been declining and are now hitting 2017 levels. So, take everything out of the pandemic, obviously. But in terms of a normal market, we're slowing down pretty quickly when it comes to the job market. With inflation or with wage growth being kind of holding steady, the number of jobs are not jumping up and vacancies are going down. It shows that businesses are uncertain of what they want to do. They're not going to go out and make a whole bunch of hiring decisions based on those numbers.
Yeah, I think in the public sector and certain areas of it, there are hiring freezes, which definitely this document would support. And where are we going? Like, if we slow down with immigration as well, I'm not sure how we boost employment in Canada. What sector that's going to come from? So I mean, I think that the employment numbers are always going to be a challenge in terms of, like, I've been on the record of saying that, like, I think that we're going to remain in historically low interest rates, and it's stuff like because automation is taking over. AI is maybe not replacing jobs, but maybe when those jobs, when that person retires, they don't need to be replaced, or they're not going to be replaced. So I think the employment numbers will likely remain relatively soft, which will keep interest rates at the historical lows that we've seen in the last decade at least.
Yeah, and I want to thread in the idea that we've slowed down our immigration, bringing the number of people into Canada. We brought that way down. This job vacancy rate would be even lower if we were continuing to bring in 1 million people a year. We just wouldn't have the jobs going forward. So I can't see that. So if we're taking out people, we're not bringing in as many people. The vacancies aren't as good. Job vacancies are low. Then that would mean that we probably don't need to bring in more people going forward. And maybe this is the 2 to 4 year outlook. because we're certainly not building as much right now with the cost of everything going up. Builders are not building. Interest rates were high before. The uncertainty of what might happen with tariffs are making builders pull back even further. So
The
if
cost
we're
of
not,
goods jumped
yeah,
as our
what
supply
I'm trying
chain
to
was
get at is
weakened.
that if there's uncertainty, we will not build as many properties. We won't be able to, and there'd be no room to bring in more people into the economy because we won't make the same mistake twice, essentially, where having people come into the country without them having a place to live. I just can't see us making that same mistake in this, in this next decade or so.
Yeah, I mean that's an interesting. It's an interesting like perspective that it's essentially like feels like we've been in a pause, pause for investment. Like because we've been facing uncertainty for a while, and it seems like that's if I was going to predict the trend, it would be it's going to continue to be paused until we see the silver lining in all of this and see the opportunity, or potentially we negotiate new trade deals and our supply chain becomes robust again, and that could be the catalyst to start
I
building
mean,
again and to go back to our sort of original immigration plan.
yeah, I mean, I think if we're developing some of our, developing some pipelines, developing some other trading partners, that certainly helps to spur on some new jobs and strengthen our economy. We can still trade the same amount to the US, but we should have a larger amount than going to other countries. Building out our natural gas pipelines or oil pipelines. Let's get some other contracts going for those, as well as for some of our other rich minerals. Let's start refining here in Canada, and that can all start to build our own homegrown industries that are not reliant on the US. If the US is going to become an island, then we need to shore up everything internally. Let's start working better together as provinces, and then make our Canadian economy stronger. Because I just can't see having certainty in the next 4 years.
Yeah, it seems like that's where we are, unless something drastic changes.
Yeah. And so I just think that's the direction we're headed. And I think, that does support lower interest rates going forward. And uncertainty in the market supports lower interest rates going forward. We certainly can have increased inflation, but recession, from tariffs, which is possible, which could push inflation up, which means pressure on higher interest rates. But a lot of economists are saying that those that would push us into a recession, which
Right.
would negate which would negate a lot of those inflationary pressures,
This is the
which would
paradox,
negate higher interest
which
rates.
makes it hard to predict. And I was trying to put together some economist predictions of what would happen next week, and it seemed like it was pretty balanced. Like that certain economists would predict a 25 basis point cut. Others were predicting, sort of what you were suggesting with a pause, and then after sort of the news that came out on Tuesday, it seemed like most economists lean towards a more aggressive rate cut between now and July. So, if their prediction was the overnight rate would have wound up at 2.5% by the end of the year, they're predicting now 2% or 1.75% by the end of July. So, the on a short notice, the economists were predicting Bank of Canada interest rate cuts aggressively from now until July.
So, and here are the implied rates. I don't think I've shared this before, but essentially there's about a 78% chance of an interest rate cut on next week, on March 12th. I think that only continues to go up the longer if this tariff business goes on all week, this will be basically 100% and we would have this. So if you're looking at this chart for the first time and you're wondering what this means, the implied rate means the Bank of Canada's policy rate being so right now we're at 3%. The implied rate is at 2.82%, which would be a drop of 17.9 basis points. If this was 25 basis points, this would be 2.75% would be the implied Bank of Canada policy rate. So if forward thinking, by the end of the year, now economists in the market are predicting 3 Bank of Canada rate cuts happening. The longer this goes on, the higher those tariff that will go. So they're expecting 1 in March, and then again we'll have 2 by July meeting at the latest. And then they're pricing in a good chance for a 3rd interest rate cut by the end of the year, which would bring us to roughly 2.25%, which is just a 1 rate above what your prediction has been the whole time, which was 2%. This must be validating.
Well, I mean, my outlook was always based on historicals, because it seems like every 7 to 10 years some new disaster strikes. We had the economic fallout in 2008. We had COVID. That the recovery was like we were swiftly recovering from COVID, because we pulled all the levers to slow that down and then release the levers to get the economy going again. This one is a bit different. But it seems like it's almost inevitable. So if you look at historical trends, you're like, yeah, something's coming. We don't know what it is. This time it's our neighbor and friend initiating a trade war with us. And that seems like it's going to drag interest rates back down. Hopefully we can find a way to keep the job losses to a minimum or not at all. And we can, remain stable as an economy, and also have lower interest rates so that we can get this housing market cooking again and get people into homes.
Yeah. So I'll just jump in with my prediction. I think we'll have a 25 basis point cut next week. I see that again, depending on how swiftly these tariffs come to place and if they're out, I can see that being it at least until the summer, where we would have another one. Because I do think, well, as you said, like we're going to have continued uncertainty, over the next I'm saying 2 years, a year and a half to 2 years, we'll have this continuing uncertainty with the U.S. administration, and that pushes interest rates down. So I think I'm not locking into any fixed rates. If I'm in a variable rate right now, I'm not locking into any fixed rates at this point. I'm waiting to see a little bit more uncertainty play out, and maybe kind of revisiting that into the fall if you are thinking about locking in.
Yeah.
What's your call on that?
Yeah, I'm pretty much in line with that. From the research and the data, I think that yes, we'll see a 25 basis points cut. It's really hard to look 6 weeks ahead, to the next rate cut or the next Bank of Canada meeting on a 6 week sort of basis. But if you look overall, you're like, yeah, the trend is looks like it's moving in that direction. We're going to temporarily at least see some lower interest rates on a fixed rate mortgage, but I don't think that until we get down in 3% sort of stuff, I'm not too interested in the fixed rate right
now. This is the implied rate on the Bank of Canada's outlook. So we're at 3% now. A year from now, the forward projection, this is not up to date, so this might be lower now based on those rates that I just showed, but it being flat kind of for 3 years, coming down and then just holding in this pattern and then heading back up after that. But any sort of prediction like that is pretty foggy. Like, to be able to say for sure what things are going to look like in 3 months, let alone 3 weeks, is a fool's errand.
I mean, even when we look at the predictions, it was sort of the predictions by most of the big six banks in Canada were like we would get to somewhere between 2 and 2.75% with our overnight rate by the end of the year. And all that's really done, I think, right now with the news is shortened up the time it will take to get there.
Yeah.
We like looking at year-end predictions right now is like maybe you want to look at it generally instead of trying to stack events that haven't
Yeah.
happened on top of more events that haven't happened and predict it out that way. So if you look at a trend, I think it's just a safer sort of position.
Yeah. If I was a home buyer right now, I think, and I felt certain about my job and my prospects and my down payment, I think that there are and will continue to be good deals out there. I've previously said that I think this is going to kind of be like COVID where, there's lower rates and people will jump into the market. I just think that there's way more uncertainty now when it comes to the housing market and people investing their money. And I don't think that we would see that same sort of, dip and then quick recovery and the market going crazy. I think we will see a pretty muted spring and summer market in terms of being able to purchase something. I think we'll look back and say this was the time. If you're looking to make a long-term investment, buying a house, buying a long-term investment property, this uncertainty is creating some pricing opportunities for people.
Sure. Yeah. I think that's the way to look at housing should always be primarily as a place to live and not just a financial asset. Sure, you can't decouple those things. But if you need a place to live, I think that you're still better off purchasing a place than renting a place indefinitely.
Sure.
And waiting out what's going to happen. Because when you look at the 40-year trend of house prices, it goes through some peaks and valleys, but in general, it increases. So
yeah,
you need a place to live. That's a long-term investment. Buy and hold. Interest rates will be lower. Housing prices are probably as low as they're going to get. So it could be a really good decision for you right now. As an investor, I don't know. Right now, and
it's a personal decision, right?
If you look at investments everywhere, do some serious research into that and make sure that you can support it if you can't get, let's say, the rent that you're hoping to get.
Well, what we do know is that there's not a lot of condo investment properties, pre-construction properties coming to the market in the 2 to 3 year window. So we're getting this big glut of condos coming to market now, but then that drops off incredibly in the 3 year mark. And also with the uncertainty and the cost of tariffs and goods and just the cost of building these pre-construction properties going up, that is meaning that builders are not building more going forward. So if you can stomach a 2-3 year window where your property value might not go up that much, we're going to see a lack of supply again in that market in 3 years' time. And you might look back and say, like,
a little bit over that time and supplement the rental income, then I think that you're in a good place.
Yeah, which also means that rent prices will go up as well, as there's not as many buildings for people to rent. There's not as many investors buying those properties to rent out. That would mean that rent prices would continue to go up over that term. So if you're looking at just from an investment perspective and wondering, should you put your money in? It certainly is a personal decision. There's certainly a lot of uncertainty in the market, but you might look back and go, maybe that was the time in 2025 or 2026 even to say, like, maybe I should jump in on a long-term investment. Certainly not a flip, and so I wouldn't be recommending that. But long-term, Toronto, Canada housing market will go up.
I should have bought when I was 12. Biggest mistake.
We all should have.
I waited till I was an adult. Well, with that, so final predictions for me: 25 basis point cut next
Yeah.
week. We'll jump on and cover that, and we'll see. There may be a whole lot of news between then and now to catch up on. Sean, final words.
Yeah, 25 for me as well. Let us know what you think in the comments. Do you agree with us? Are we way off? I know it's a touchy subject, a lot of this, so I'm sure there's going to be some agreement and disagreement. We'd love to hear it in the comments. If you like the content, like it, press a like for us, and subscribe if you love it. Tell all your friends, and we'll see you next time on the Mortgage People podcast.